Hello, and thank you for joining us today. Today's segment of Nexdigm's popular knowledge-sharing webinar series, Diversify to Differentiate, Think India, Think Next, is organized by the Consulate General of India in Chicago in collaboration with Nexdigm. Our agenda is jam-packed. We're going to have opening remarks and key insights from the Consul General of India in Chicago, a short presentation showcasing the attractiveness of and investment opportunities in the food processing sector in India, our featured guest panel discussion, and then we will have a brief video at the end. So I hope you're all able to join us and stay with us. Before we begin, please note that you are in listen-only mode and that you will have the opportunity to provide questions using the question box on your control panel. If at any time during this session you submit those questions, we will try to address them towards the end or in writing if we're unable to do so during the session itself. So my name is Marc Lessem, and I'm going to be moderating today's session. I'm a senior executive director with Nexdigm, and like many of you, I'm a business executive with operating experience across multiple functions and industries. In my current capacity with Nexdigm, I partner with North American businesses seeking to transform their operations and/or invest profitably into India and other parts of the world. I'd welcome meeting with any of you interested in learning more. It's my pleasure to welcome the Honorable Amit Kumar, our distinguished guest of honor. Mr. Kumar is a career diplomat who joined the Indian Foreign Service in 1995 and is currently the Consul General of India in the Indian Consulate in Chicago. He's been pivotal in building long-lasting relationships with foreign countries, having held several diplomatic positions in the Indian embassies in Washington, D.C., Tokyo, Beijing, Berlin, and Ankara, as well as working in the Ministry of External Affairs in New Delhi. Mr. Kumar has dealt with both bilateral and multilateral work in diverse areas in the political, strategic, and economic spheres. Mr. Kumar, I'm pleased to welcome you and invite you to offer your introductory insights.
Thank you very much, Marc, for those introductory remarks. At the outset, I would like to thank Nexdigm for helping organize this important seminar on the subject of food processing opportunities in India. Nexdigm has been an important partner for us in talking about synergies that exist in different economic sectors of our two countries and advocating greater engagement. Before I turn to the subject of food processing, I wanted to briefly touch upon two aspects, the state of India-US relations and the prospects of the Indian economy in general. India and the United States of America are strategic partners and today enjoy a wide-ranging partnership which has progressively expanded and deepened over the past decade. It would not be an exaggeration to say that our partnership today covers almost every facet of human and development endeavor. Our total trade in goods and services was close to $170 billion last year, having clocked double-digit growth rates over the past decade, except for 2020 when the trade dipped for obvious reasons. The bilateral trade in goods in 2021 crossed the US $100 billion mark for the first time and finished at US $113 billion. This positive trend has continued with our trade in the first 6 months of this year representing a growth of 22%. Now, the COVID-19 pandemic had led to a slowdown in the Indian economy, just as it has adversely impacted economies globally. But I believe that on the back of consistent structural reforms and regulatory liberalization, including during the COVID period, a relaxation of FDI norms, enhancing the ease of doing business, our focus on improving both physical and digital infrastructure, has all set the stage for economic recovery and sustained growth. The reform process remains a work in progress and the government is committed to stay the course. As the world slowly emerges from the long shadow of COVID, there have been headwinds due to the conflict in Ukraine, the continuing zero COVID policy in China, and inflationary concerns in the West. At the same time, in this backdrop, the Indian economy remains strong and is projected to grow at 7.4%. Our rankings on the ease of doing business, innovation, and competitiveness indices have all significantly improved. This is reflected in the sustained rise of FDI inflows over the past few years into India, which have received $340 billion of FDI in the last 5 years and $81 billion in the last financial year. But turning to the food processing sector, I think I should begin with one obvious fact which is worth reiterating. India is a large domestic market with 1.4 billion people and a rising middle class. The Indian food processing sector is also one of the largest, and as per a recent McKinsey report, this sector is expected to reach $500 billion by 2026. Insofar as production of food is concerned, India is one of the largest producers of not only food, it also has a large livestock and marine stock. So from that perspective, India enjoys supply side advantages when it comes to food processing. At the same time, the proportion of food processing in India is less than 10%, which is very low compared to the developed world, or even when compared to countries like Mexico, Brazil, China, and Vietnam. And if you were to take out the dairy sector, the proportion of food processing in India actually drops below 5%. All this, of course, means that there is vast potential for expansion and thus represents a massive opportunity. A related aspect and also another important priority for the government is to address the problem of wastage of fresh farm produce in India due to inadequate storage and cold supply chains. There is thus potential for growth, not only in the Indian market, but also in leveraging India's geographic location for export of food to our immediate and extended neighborhood. And I'm aware that some of the global food processing companies are already using India or are planning to use India as a hub to reach out to the South Asian market in particular, but also to some Southeast Asian markets or the Gulf and the Middle East. The impact of the pandemic was also felt in the food processing sector, but ironically in a somewhat positive sense. We saw that during the pandemic, certain segments like packaged food, ready-to-eat preparations, and frozen food have all gained wider acceptance among our population. Other factors like greater urbanization and higher disposable incomes are changing food consumption patterns. Now, as part of our overall national effort to strengthen the manufacturing sector and to position India as a more active player in the global supply chains, government had announced production-linked incentive schemes or PLI schemes for several sectors, including the food processing sector. This is in addition to steps being taken by the government in recent years to support the food processing sector, taking cognizance of the economic and employment multiplier effect of this sector. In terms of other steps, the Pradhan Mantri Kisan Sampada Yojana takes a holistic approach to supporting different facets of the food processing ecosystem. It includes schemes and government incentives for development of mega food parks, for augmentation of cold chain and value-added infrastructure, for creation or expansion of food processing and preservation capacities, and for food safety and quality assurance infrastructure. And these steps have led to a significant expansion of food processing infrastructure in recent years. And just to illustrate, for example, in the past 5 years, there have been development of 22 mega food parks in India. The government had additionally introduced the production-linked incentives scheme for the food processing industry. And the objective was to ensure that Indian companies improve their competitive strengths in expanding quality of output, improving productivity, enhancing value addition, and strengthening their linkages with the global value chains. Among the objectives behind this scheme, with an outlay of almost $1.4 billion, is to seek expansion of processing capacity, improving branding, and ensuring more remunerative prices of farm produce to ensure higher incomes for farmers. The PLI scheme will enhance opportunities for MSMEs in the food processing sector to cater not only to the domestic market, but to enhance our exports as well. The response to the PLI scheme has been quite good. The government has approved 149 project proposals worth USD 1.2 billion, which are expected to create around 300,000 jobs as well. Eventually, I believe that the strengthening of the food processing sector will also lead to enhanced economic activities in several other areas, such as transport services to deliver products to wholesalers and retailers, plant equipment repair and maintenance, insurance sector, and so on. In the United States, which is a very mature food processing market, every job in the food and beverage industry leads to 3 additional jobs in other economic activities. And this is a scenario that can be replicated in India as well. With this, I'll close my remarks, but I look forward to our interaction ahead. Thank you.
And then thank you, Mr. Kumar. I will say that what you did today was you set a really compelling launching pad for everything that we're going to be talking about today, and I'm sure it is going to be very valuable. I also would say that I've got a presentation, and I'm going to work with my colleagues who are working on the presentations and sharing it to ask them to be on their toes, because I'm going to do some audible. You covered a lot of the information that I had planned to cover. I will elaborate on what Mr. Kumar discussed, but we are going to not waste the audience time by repeating too much. So bear with me as we go through this. Let's go ahead and start the presentation. We're going to talk about the food processing sector, its various segments, some of the constraints and the mitigation efforts, even some that Mr. Kumar mentioned, and then the US-India trade story. So the India is going through a really rapid transition in terms of the demographics and nutrition. As with many global consumers, India's consumers seek to modify their lifestyles and with healthier food and beverages. By 2030, as Mr. Kumar alluded to, the sheer size, the Indian annual household consumption is expected to triple, and that'll make India the 5th largest consumer market in the world. In fact, experts predict that the market's going to nearly double to 535 billion by the year 2026, as Mr. Kumar alluded to. So the opportunities are certainly going to be tremendous. Now, over the years, India has seen a large, steady flow of foreign direct investment into the food processing sector, and that's allowed under the 100% automatic route, one of the mitigation efforts. And that means that there's no formal government approvals that are required. As a result of that, the sector attracted FDI of nearly $11 billion last year alone. So to understand the potential in the Indian food processing sector, let's look at the global share of processing levels of other countries. And Mr. Kumar alluded to this as well, but it's nice to see graphically. And as you can see here, in developed economies, the share of secondary and tertiary level processing is really quite high. In contrast, for developing economies like India and Mexico, secondary and tertiary processing is not quite as prevalent. So this imbalance is what we're here to discuss, because it signifies opportunity. And if we explore India's import-export activity in the sector, we can see that major imports include specialized pulses, cocoa products, and fruits and vegetable seeds. Compared to a prior year, in 2021-22, there was an approximate 30% increase in those imports. Now, major exports, they include rice, buffalo meat, ground nuts, processed vegetables, and wheat. And similarly, exports increased at about 20%. So as we referenced earlier, the processing sector is ripe for investment opportunity, and savvy investors are taking advantage of that today. Some recent investments can be seen here with these investments ranging really in size from 100 million to over $250 million. So the investments are in a variety of specialized processing areas like yeast manufacturing, chips manufacturing, food parks, which Mr. Kumar alluded to, and food service. So our next slide is a little bit busy, but you can see here that we divided the food processing into 6 subsectors. And I want to point out a couple of things related to the global position that India holds in these subsectors. So India ranks first in milk production, and you heard Mr. Kumar reference its dairy subsector. Second in fruits and vegetables. India has the largest livestock population and is a leading exporter of buffalo meat. It ranks second in egg production, second in fisheries and aquaculture, and it's second in largest producers of grains. And finally, it's among the top 5 economies in the world for production of consumer goods. So again, as he alluded to, it's impossible not to be impressed by the sheer production prowess of India with respect to its food processing sector. Now, also, as Mr. Kumar mentioned, the food processing component is relatively low because across each of these subsectors, it ranges from as low as 5% to only 35% in dairy. And on average, the food processing levels out at about 10%. Now, that's much lower in comparison to several of the other countries that you saw on the previous slide. So while India is very strong in food production, there's opportunity, there's investment opportunity available in the the food processing space. So one cause for the current processing levels is waste. Again, Mr. Kumar referenced this. Fruits, vegetables, and marine products, they suffer from about 40% waste rates. And that's followed by dairy at nearly 20%. So these high waste rates, they open up several opportunities for businesses interested in farm-to-fork supply chain space. Now, key trends across the subsectors are listed here on the right side of this slide, and time constraints today are not going to allow us to get into that level of detail, but we will forward you the presentation and you can review these trends on your own time afterwards. So insofar as some of the challenges to the food processing industry go, some of them are small farm sizes, the lack of farming mechanization, limited usage of high yielding production techniques, and growing table grade products. These are all examples of hurdles in the increasing value and the yield for the sector. Furthermore, the lack of supporting infrastructure in storage and transport also results in some of this high waste. All of that said, some mitigation efforts have been made by the government and elsewhere others to address these issues. And so Mr. Kumar mentioned some of the schemes. The PM-KSY scheme, for example, provides incentives in several areas like cold chain startups, new processing startups, and it encouraged the establishment of mega food parks and state-of-the-art facilities. The production link incentive schemes, PLI, which he spoke to, they were launched for certain value-added subsectors such as cheese products, marine products, and more. And many large companies like ITC, Nestle, and others have already taken advantage of the PLIs. The incentive outlay for this scheme is close to $1.5 billion. And agri-finance and agri-insurance schemes have been launched to safeguard the interests of farmers and provide support to bolster farm production. While these steps address challenges, certainly more is necessary. Let's take a peek at the India-US trade balance. In this slide, you can see India's exports to the USA have steadily risen over the years with a recent year-over-year uptick of 20%. Conversely, imports from the United States have marginally decreased over the past couple of years. And on here, you can see the top export and import items. So this concludes my formal presentation. I hope it wasn't too redundant with what Mr. Kumar shared, and I hope we were able to provide some insights and lay some groundwork for what is now why you're here, the key panel discussion. So I'd like to introduce and welcome all of our panelists. First, Peter Rose. Peter has worked in various leadership capacities within the food processing industry in operations, research and development, commercialization, and sales. Currently, with OSI, Peter is the Vice President of International Strategy, Mergers and Acquisitions, and the Managing Director of Creative Foods, an OSI further process manufacturer in the UK market. Welcome, Pete. Dhiren Kanwar is President and Managing Director for India and the Middle East at Griffith Foods. With over 30 years of experience, Darren is an accomplished leader in the food and hospitality industries. He's been an entrepreneur, an award-winning chef, and later as a senior executive, he specialized in market entry strategy for startups and early growth companies. His experience and intuitive ability have helped him sense early trends to guide companies in developing innovative products and go-to-market strategies to gain competitive advantage. Welcome, Darren. Also, I'd like to welcome KS Narayanan, ex-managing director at McCain. KS is a seasoned professional with over 3 decades of experience in the food and beverage industry, working with fast-moving consumer goods, food service, and food retail. His range of expertise spans marketing, sales, operations, and business development with B2B and B2C businesses across ambient, frozen, and chilled categories. He carries a decade of experience in leadership roles, having worked with hotel, restaurants, and cafe majors in setting up new verticals and establishing them as the go-to product in India. He has also worked across the counter, running restaurant chains, cafes, and parlors. I'd invite you all to remove the mute button and join us for the panel discussion at this time. KS, let's start with you. You drew the short straw, so we're going to kick it off with you right away. Why is the food processing sector considered as sunrise? And I put that in quotes, a sunrise sector.
Thanks, Marc, and welcome all to the session. Very clearly, as the Honorable Consul General and Marc had laid out, clearly the opportunities are many, and really the reasons for why food processing is a sunrise sector are really many. To top it all, some of it I may possibly end up repeating again. I would like to start with the demography. It's clearly a 1.4 billion population that needs to be fed daily, day in and day out. And that's clearly one of the largest reasons for it. We're also seeing rapid urbanization, which has happened over a period of time. And that has led to changing consumption patterns, growing per capita income, leading to further rise in consumption. So that I would say is one of the primary reasons. As a result, a very large domestic market. 2020, roughly about $260 billion, likely to go to $500 billion over the next 4 to 5 years. That is a humongous size that we are talking of. And very clearly, this also need to look at it, the Made in India products opportunity across the global world and across different supply chains, which we are able to link onto. That provides another huge opportunity. The third most important thing, as we say, is that with growing per capita income, we are witnessing great changes in consumption patterns. Global trends which used to take longer to come into the country, thanks to the reach of media, social media, all of that, come in much faster. But certainly, what we clearly see as a consumption necessity is that food is very cultural, food is pretty local, so you need to have the touch to sort of address the Indian palate. I think that is a key important thing which many food companies have to take into and adapt to. Adding on to this whole thing, which I think most of it, which the Consul General as well as Marc had covered, I would like to add a couple of other points. First and foremost is that large QSR brands, whether it be the McDonald's, Domino's, Starbucks, across this world, they have come in and established themselves and pretty strong footing, rapidly expanding, not only in tier 1 cities, but also now getting into tier 2, tier 3 cities. So very clearly, the consumption base exists there, and these such brands are able to expand. Of course, they've had to, what I would call, Indianize or localize their menus. But certainly the product format, the technology, all of that remains the same. The other important point to note is also the very vibrant startup culture. You've got thousands of youngsters who are getting into this sector with just, I guess, fire in the belly and ideas and innovation, as well as also value-added products are concerned. I think that's another, and these are happening across, I would say, what I would call D2C brands, direct to consumer. They're using online e-commerce as a differentiator, getting into the market fast. That is one area. The other important is also in the food service sector, where they've been able to use the presence of aggregators and reach out to the consumers much faster, much better, and in a more efficient manner. So I guess that's another thing. So not only are large companies getting into these fields, but also we have a large number of startups which are getting in as well. And a couple of other points which I would also like is that, as you had also mentioned, we are really number 1 or number 2 as far as most agri-produce is concerned, as far as the country is ranked by world. But when it comes to processing, it's less than 5%, 10% in most of the sectors. So very clearly, there exists the opportunity to cut waste, to develop value-added products and move ahead. And last but not the least, I think, which is equally important, is the evolving rules and regulations, and is also aligned to the market needs. I think this is another important aspect. Simple example is that a few years back, we adopted a common regulatory body called the FSSAI, Food Service Standards Authority of India, where all the laws were sort of integrated into one, and we follow the Codex International Standards. So we are internationally aligned, and ease of regulation, which is really evolved over a period of time. So I guess to sum up, all these things put together clearly makes it sunrise, or I would say even beyond sunrise.
Well, I appreciate that. I want to just say that I don't think the fire in the belly is limited to startups and youth. I could sense your enthusiasm. So I think you had that fire in the belly as well. And I'm not going to let you go just yet, because Mr. Kumar talked about ease of doing business in India, and
Yes.
you now speak about these evolving regulations. So I want to go off script a little bit and then say that, we had the opportunity at Nexdigm recently to represent an association of ice cream parlors.
That's right.
Yeah, so we advocated at that time for clarity on their behalf related to some tax ambiguities. At risk was a higher tax burden for these association members. So policymakers ended up agreeing with our argument and made appropriate recommendations to the authorities. And I know that those will soon be put into effect. My question then is this an example of the policymakers focusing on the practical business issues to make doing business in India just a little bit easier?
Yeah, it certainly is. One, as I said earlier, we had the common law, which sort of encompasses and which follows global standards. And this was a classic case again. To elaborate on that, we have these whole range of ice cream parlors. These are typically local or regional brands because of the ice cream cold chain which is required, and involves a large number of small and medium scale enterprises spread across the country. They followed typically like how the Indian restaurants have been asked to follow a discharge a duty of 5% GST with no input credits. So they all had switched over to it. However, subsequently, it was modified to 18%. So the differential duty of 13% was sort of asked for them to be paid back and all of that. So I guess not only the industry association, but also number of associations plus Nexdigm represented to the government as to what positive effect it would have in terms of if you are able to move ahead with a standardized uniform structure of 18%, give them the necessary input credits and move ahead with it. And I think the government did take a proactive view, which really, I would say, would have otherwise impacted large number of small and medium enterprises as well. So it's clearly in the right direction, and sort of we are moving ahead. And that I would say is a real big positive, Mark.
Yeah, thank you so much, Gas. Let's start, Darren. You've been patiently waiting, as I know Peter has also. Darren, Griffith Foods provides solutions to fast-moving consumer goods, CPG, food and beverage, and food service companies. So you do a lot across the world and across the industry. Could you provide a little bit of insight into your business as a US company operating in India now for, I think, over a decade, but maybe comment on what's worked for you and maybe some challenges?
Absolutely. Thanks, Mark. Yes, we have been in India now close to 15 years, and that's still short from our 100-year legacy. But I think we learn in every market that we enter, and India was no different. We've had our learnings, but we've had our successes here as well. One of the aspects that we saw in India particularly was that India had a huge culinary heritage. The variety of food, the diversity of food across the regions, across areas was huge. People wanted localized food, but they also wanted some amount of standardization. They wanted assimilation of foreign tastes. People were traveling more often. They were exposed to foreign cuisines, and they wanted that authenticity when they returned back home. But on the other side, they didn't want to leave the real cultural heritage which they found back home, and that was the comfort food. So it's been a challenge trying to put all that together into a few products, but that's the opportunity as well. And that's what we've been trying to do for the last 15 years here. We've upped our investment. We've built a second factory about 5 years ago, and we've just made an acquisition early this year as well. So it's been a very encouraging journey for us, and it keeps coming. It keeps getting us back for more. I think what is also interesting is, as a company, spices are a major source for our raw material as a product. And India has such a diversity of spices, and working with the farmers here is itself so satisfying. So we have a huge program around sustainability that we've implemented a few years ago in India, and that's helping us not only consume the products here, but also export it to various countries outside India. So that's another learning that we've had, and great opportunity to do that for the Indian business.
Thank you. I love the fact that Griffith has chosen to grow both organically and inorganically in India. I think that speaks tremendous to what's happening there in general. And I'd like to turn my attention now to Pete. Pete, Mr. Patience, thank you. So the OSI Group, I mean, you're one of the leading meat processing groups in the entire world. How has your group's experience been in India? And maybe we can compare that to other Asian countries. And what factors really stand out that are maybe particularly uniquely experienced in India?
Sure. Thanks, Marc, and thank you, Mr. Kumar, for having us today. A number of things, a number of ideas jump out with your question. OSI has been in India since 1995. We initially entered the market as a joint venture with actually a local customer partner, and today we operate 3 facilities throughout the country as a wholly owned subsidiary of OSI. I think when it comes to differences to the rest of the world, there's one inherent in the way you asked the question, that OSI is a leading meat processor all over the world. We grew up as a pork and beef further processor in many parts of the world. In India, we're not a pork and beef processor. We are primarily a vegetable company for many obvious reasons. And so within that market, we've had to develop new learnings, new formulas, a new understanding of vegetable-based product, whether it's potato or cauliflower or pea-based. And while we seek to export that product itself, we've certainly exported the learnings to many of our other markets around the world around that processing capability and technology. So that certainly product jumps out as one large difference. I think our involvement in the supply chain has been quite significant since the 90s, whereas in other markets in the world, we've been present and we've benefited from a supply chain that's been established already, and it's maybe even more of an afterthought in some of our considerations. In India, we've been a part of growing that cold chain. We've also been a part of growing the regulatory and the quality environment as well for the betterment of the industry. So I think that's another way that we have operated differently within India as well.
You have had to make a gigantic pivot in your business to operate there, and that speaks a lot to the flexibility of the management team. Thank you for that. I think it's really kind of nice for the audience to learn about the experience that both Griffith and OSI have had in India. And I think the stories perhaps ultimately build confidence among the US companies and additional global investors. I want to turn to Mr. Kumar, because given this backdrop, Mr. Kumar, I kind of have a 2-part question for you. One is, what are some of the factors that are attracting the US investors to establish and or expand, as Darren mentioned, into India? And the second part is, based on your own personal interactions, what are the larger concerns raised by US businesses that are looking at maybe migrating into India?
No, thank you, Marc, for that question. Quite clearly, the food processing sector is a priority for the government. And the very fact that there is such low penetration of the sector in India also, I think, attests to presence of constraints which have been there historically, and something which is government is actively trying to redress. So I think the field is wide open for significant investments, both domestic and foreign companies, including from the US. We have already talked about the fact that the food processing sector in India will be worth $500 billion by 2026. That's the estimate. By 2030, our annual household consumption is also expected to treble. So if you take a combination of these two factors, I think there is a lot of potential for growth in the food processing sector. In my remarks, I had not really covered the foreign direct investment part, which you did. So I will not repeat that, but I would just again add that apart from sector specific initiatives that the government has taken, the overall improvement in ease of doing business and in terms of improvement in infrastructure, in terms of deregulation, I think all these things will contribute to strengthening this sector in India. Similarly, building of mega food parks will act as hub for food processing sector, bridging the divide between the farm and the market. Now, in terms of specific interactions, of course, we had recently organized meetings of food processing companies with the Invest India team, which was recently here. In our interaction, one thing which has come up and which Mr. K.S. Narayanan also mentioned, he spoke of a specific case which revolved around the taxation issue for the ice cream industry. So from time to time, I think there has been issues relating to taxation or customs duties. But again, I would say that government is listening intently to the feedback that it receives, and our overall effort is to fine-tune wherever there are gaps in such regulation. Thank you.
I appreciate that. And I agree, as somebody from the outside looking in and seeing the rankings and how they've improved on the ease of doing business, it's clear the government is maybe a little more flexible in listening and reacting. So I agree with you 100%. I appreciate those comments. Dhiren, Mr. Kumar in his opening remarks made mention to some of these global macro issues. I'll repeat a couple of them, like the pandemic and the supply chain interruptions, inflation, war, trade sanctions, and certainly there's others. How have these factors changed your outlook on the India market and maybe the way you guys conduct business, and how different are customer expectations now as a result?
Sure. True. The last few years has been, I think, nothing like what most of us have seen. We used to talk about the VUCA world, and now that has been now replaced. One of the futurists, Jeme Pascal, said it's now the BANI world. BANI is its brittle world, it's anxious, it's non-linear, and it's absolutely incomprehensible. So if I was to look at the India market in those ways, I think we are vulnerable at any point of time. No matter how large we are vulnerable. And the idea is to look beyond that of how we can add value. For example, if I look at just the top 10, 12 companies in India in food processing, the top ones, almost half of them are less than 25 years old, 30 years old, ballpark. And so you see that they're recent, so to say, compared to the other companies. They're much recent companies which have come into India, and they've made something out of what they see happening on an everyday basis. So that's one part. The other is the anxious part, and people are anxious. There's a lot of flexibility which is needed for people to look at opportunities in the market. So my advice would be to be very, very flexible when they come in and see those opportunities, rather than coming with preset minds to say, here is what we want to do. And that's important. And the third one, going non-linear, is really about innovation. There is so much opportunity for innovation that one will find here in India, that one is you will be surprised at what you can take away from India to other parts of the world. So that's an opportunity by itself. And the fourth one, incomprehensible, is that because of the diversity that you find in the country, you'll find so many data points that will allow you to first put all that together. And if you're able to analyze your data well, you'll get so much more to learn about what you can do more. For us, long term, we don't see any change that we would want to bring from what we are doing today. Of course, we would always like to learn from what we've been doing. We continue to invest in the market heavily. We'll continue to grow. There's much more to be done. I think even in 15 years, we've just scratched the surface right now. We are hiring aggressively. We are investing aggressively. In the short term, I think there's, as I mentioned already, we are growing organically and inorganically, and that's a perfectly well way to cement or show our dedication to what the country needs in terms of opportunity. What we have done recently, and in terms of the last 1 or 2 years, is we've done an acquisition, we've done a joint venture, we've enabled our teams to adapt very aggressively. And that has helped us with product launches. We've done like 30 product launches in the last 2 years. I would say all of that, Touchwood, has worked very well for us. We are close to 30% over our pre-pandemic sales. And that shows the opportunity that's available if you do things right.
Yeah, and I appreciate also the new acronym. Thank you. Pete, I want to turn our attention to you, if you don't mind, and ask you a very similar question, different perspective now. How has the OSI Group managed the customer expectations, and maybe what's changed for you over the past couple of years?
Marc, thanks. Obviously COVID was a mess, right? And it was a difficult time for everybody, right, all over the world, and really in any industry out there. I would say that from a COVID perspective, there were actually more similarities in our response and our how we're exiting it in India to the rest of the world than there were differences. We all had supply chain issues. We all had policies around wanting to make sure we take care of our employees first, right? And then how do we take care of our customers once we had taken care of our employees? And OSI largely managed that from a global perspective, setting global standards, global expectations for all of our locations. And then of course the local teams adapted to that for the local nuance and the local regulation. One of the things that we saw early over the last couple of years from a customer perspective or a consumer perspective is what we call the 3Ds. So I'll introduce another abbreviation here, is if a customer or a consumer interacted with a chain or a restaurant brand that had either drive-through, delivery, or digital connection to their customer, it was a very different response and a different rebound through the pandemic than it was if you were in a food-based establishment that didn't have one of those capabilities or interaction points with customers. And to go even a bit further into detail there, really, if our customers had 2 of the 3Ds, then they did okay, right? The ones that had 3Ds, they did great. And they're well ahead of where they were before. And we saw that response around the world, and we particularly saw it in India as well. And not because of any great strategy, just because of how OSI has evolved over the years. Our customer base in India had 2 of those 3Ds associated with their offering to their consumers. And so similar to the company overall, we've come through and exited the pandemic. We feel stronger actually than we were prior to the pandemic, because we've aligned ourselves with the customer group that has really accelerated because of their ability to continue to service the Indian consumer through the pandemic. generally speaking, we remain, bullish about future growth in India, and we are actively seeking both organic and inorganic expansion opportunities within that market, with some of the tailwinds from the customers that we happen to have through the last difficult couple of years.
Very nice. I like that you took care of employees first. That's key. And I would probably add delicious to that 3 Ds and make it 4. Because certainly if it's delicious, they've survived, and we're all consumers, our audience and everybody here. So I think we all understand the reason those 3 Ds were very pertinent. I will speak to the audience here because I'm trying to weave some of your questions into the questions that we're asking the panel. So I'm getting to that, but please continue to submit those as you'd like. Mr. Kumar, I'm going to come back over to you. We've addressed some of this earlier in my presentation. I know our other panelists have also mentioned some of these things, so we don't need to repeat them, but maybe there's something new. In light of the shifts in these consumer expectations, what efforts have been taken or maybe are planned by the Indian government to support and bolster the growth in this sector? Maybe some things we haven't already discussed.
No, I think yeah. But what I'll do is refer to the geopolitical context, and I think this current geopolitical flux has brought additional issues to the fore regarding food security and agricultural sector as a whole, and therefore, in terms of our national planning and in terms of our international collaboration, we need to look at food security issues. We need to look at climate change and as well as sustainability of the food supply chain. Our effort, of course, has been to ensure that Indian consumers continue to have food security, enjoy food security, but at the same time also help assist others as might be possible. And to take this aspect further, I just wanted to refer to an important initiative that has been taken by a grouping called I2U2, which basically brings together India, Israel, USA, and UAE, and under which the 4 countries have decided to work on setting up integrated food parks. In India, this is a $2 billion initiative where we have funding from UAE along with technological expertise from US and Israel to look at aspects relating to enhanced food productivity and related issues. So I think on the international side, we are taking some missteps in this regard. So I wanted to mention that. I just wanted to pick up on one issue which I had not covered in my remarks, but Mr. Narayanan had mentioned about it, which is the growth of startups in the food processing sector. And this is also, again, a very welcome development. And just to see what it can do, I wanted to refer to one example of a company called Egos. This was founded by 4 graduates from IIT Kanpur, which is my alma mater. But the interesting thing is that these 4 professionals actually went back to UP and Bihar and connected around 200,000 farmers, and they started a poultry business. They sell and produce eggs. I think the current they're selling around 4 million eggs a month nowadays. But the interesting part is the social impact that has brought about in terms of improving incomes for these 200,000 farmers. So I think initiatives like these are something which is most welcome, and I think government regulations are trying to help support such initiatives as well.
Appreciate the practical example. And I'm going to turn to KS now, since Mr. Kumar referenced you. I'm going to follow up with you. In your experience, adaptability is a big issue, and certainly, maybe you could talk a little bit about that. If you can talk about maybe a company or two, or just your experience in terms of being adaptable, especially in India.
Sure. No, certainly, I think as Dhiren as well as Peter has mentioned, we clearly, food is something which is local. The cuisine changes every 50 kilometers in the country. So you need products that are locally relevant, locally adaptable to the taste. And that's extremely important. So that is from one side in terms of from a consumer side that we're looking at it. But at the same time, we also have to look at it from the back end, the manufacturing, etc. So from my experience, again, I've seen you have in US and in other European countries, etc., the plants may be of much larger size and scale. Maybe they'd be running at about whatever 7.5 tons, 10 tons, 12 tons an hour. Now, to come in with a new product concept where the market is developing with such large scale into the country may not be the right approach. But we would possibly need lines which are much smaller, 2.5 tons sort of a thing, which then helps sort of you're able to sort of build and develop the market as we go along. That is point number one. Number two is that it should not again be a production line which can produce just one type of product. Maybe a line which you can try and repurpose it to make multiple products. So to give an example, if you're having a potato processing plant, it cannot just have French fries coming out of it, but also maybe potato patties, aloo tikkis, which is a locally relevant product, which is essentially potatoes with a whole range of Indian spice, whole spices, etc. So all of that, I think if you're able to do that, bring a smaller line in, have a multi-purpose line, repurpose it to produce this one. So what you're doing essentially is that you're using global technology to produce value-added products, ability to, as the Honorable Consul General said, in terms of making an impact at the back end, ability to grow far superior variety of, could be any vegetable or dairy product, all of that. So all of this together, the end of the day, the consumer, whether it's a food service consumer or a retail consumer, ends up benefiting, getting a far superior product. So I think you clearly need to have an open mind to sort of repurpose manufacturing supply chain lines, to look at products which are locally relevant. And again, after that, also in terms of go-to-market, the advanced countries, US, Europe, etc., could have different go-to-market. Whereas here again, we're again a land of many countries, literally, I would say. So in terms of go-to-market, again, it could be part for food service, part the QSR chains, as I mentioned, part retail, part online. So it's really, you need to look at a very omni-channel sort of an approach to go in over there. And last but not the least, the average consumption value is also lower. So what you may end up selling a 1 kilo or a 2.5 kilo pack in the US may not fit into the refrigerator freezer sections which many consumers have in case of a frozen product. So may have to look at smaller pack sizes, smaller sachets, so that your ability to increase the trials and so on is there. So I think all these things are clearly critical. You need to look at it end to end, from the sourcing right up to the consumer. How do I make a better product? How do I make it locally relevant? And how do I deliver it? I think that is the critical thing. And as Dhiren mentioned, there were about 15, 20 companies which are all less than 15 years old, and they've all grown up size and scale. I think they've done exactly that, to sort of deliver products and solutions which the customer wants, but using global technologies, better products, raw material ingredients, and so on. I think that really is what I would say.
Thank you. We're getting up against the clock, and I want to be recognizing the audience's time. So I've got maybe one question that everybody could touch on briefly. And I'll start with Darren, and we do have a special guest also at the end. But in your concluding remarks, Darren, maybe you could touch on some of the success factors or drivers for growth of the food processing sector.
Sure, Marc. At the end of the day, as K.S. just said, it's what the consumer wants, what the customer wants. And the customer needs are definitely changing. They have accelerated over the last couple of years. For example, convenience. People want much more convenience today. And because of what they went through, they want a level of trust of what they're consuming. So the brands that they trust are definitely the ones that they prefer much more to go to. While they're doing that, they also want to get to authenticity. A lot of the products that they want it to be authentic, real, and they read both sides of the label today, much more than they were doing before. What is in the product? And finally, it's about the value proposition, as Case mentioned. I think the companies that or the consumers that we look at, they look at value of what they're consuming in so many different ways that you have to speak to them differently. Companies can look at several customers, and not very big ones, but they can look at several large customers that they have to deal with, but they have to customize to each one of those. And so the size of the market is really huge, but you have to know where you want to focus on. That can really be a huge lot. There are new areas of opportunity. Of course, it's not only the ones that we've seen. Yes, we are big in dairy, we are big in, let's say, millets, we are big in pulses, but there's lots of businesses around these that are emerging. Environmental concerns, pollution is one. How do you do that better? How do you do better sustainability? How do you do regenerative agriculture? That's a huge buzzword today that's coming into India as well. People understand that we need to keep producing 30 years from now. So you have to know where you want to do the value addition to your product. The second part is the level of integration that you want to achieve. You can really be focused on one part of the value chain, or you can do 2 or 3 parts of the value chain. So you need to really make a decision of what is the level of integration that you want to focus on. And finally, I think given the size of the market, you cannot reach everywhere all on your own. What we've learned and what I would advise personally is look at partnerships. Look at how you can join hands with a lot of other people. And there's always the government who's there willing to help in assimilating that and trying to get that organized. But there's enough possibilities of, as Case mentioned, of interns, as startups, which are there, which are that kind of ability of people who don't have enough resources but have enough ability to do things are available. So join hands, do partnerships. That's my short list, but very focused list of advice.
Thank you, Pete. I'm going to turn to you, kind of similar question about the top factors maybe U.S. companies should be prepared to address as they enter.
So, KS and Darren have probably stolen my thunder here a little bit, but I'll highlight a few I think that we consider the most. We spent, I think, a bit more time in detail on supply chain and the value chain when we think about how to expand or how to create new capabilities and capacities in India, and going up and down that value chain and strategically deciding where we have to own it, where we have to partner or joint venture with it, or where we can, lease or rely on third parties is a bigger decision for us, I would say, in the Indian market than maybe it is in other markets in the world. I'd say the other piece that KS touched on is you have to right size your investment. We're all part of organizations that have built humongous technologically advanced, automated, $100+ million facilities all over the world. And the challenge with that in India is to get a return on that. You have to price in such a way that your addressable market from a population size is probably pretty small. So you have to be very mindful of right-sizing the investment with the proper flexibility to make that addressable market in India, which is growing and growing rapidly, as big as possible. And then finally, it's we've taken a long-term view on our presence in India. It's not a 5-year view. It's a view that's measured in decades, right? And we will continue to do that. And I think you have to have that patience and that fortitude to ultimately be successful in the market.
Thank you, Pete. Before we make one last introduction, I want to turn to Mr. Kumar for any closing thoughts he might have.
No, thank you. I think from our perspective, I think one key priority is, of course, improving the logistics and storage infrastructure, cold supply chains, and so on, because this is something which sort of cuts across different subsectors of the food processing industry. And of course, several subsectors have lot of potential, but I just wanted to refer to two of them. One, of course, is the dairy and the meat industry and value addition that can happen. There are several reports which suggest that there is infrastructure gap of around 120 to 130 MMT, and which can bring about 17 to 20% return on investment over the next decade. So this is one sector. And one last thing is, back in India, there is growing, I think, cognizance of the fact that we are a protein deficit country. People are getting more health conscious. So I think a protein rich food sector, either through poultry or plant-based supplements, is something that will grow much faster in the coming years. So these are some of the areas I think, from my perspective, we should be looking at.
Thank you, Mr. Kumar, KS, Peter, Darren, all of you. Thank you. I think the discussion is very helpful for the audience. I want to just also let the audience know we're going to run maybe 3 or 4 minutes late. Hopefully you'll be able to stay with us. I'd like to now introduce Samuel Brilliant. Sam is an accomplished global financial leader. His professional career has evolved and involved spearheading strategic financial projects, which include corporate mergers, working capital optimization, enterprise software implementation, performance metric definition to measure progress, and many, many other things. As a senior global business advisor at Nexdigm, Sam advises our board members. He mentors the leadership team on its financial and corporate endeavors, and he guides our global strategic initiatives. He helps strengthen existing client relationships, and he supports us in identifying new opportunities. Before joining Nexdigm, Sam held the Chief Financial Officer and VP level positions in the areas of strategy and finance at major US multinational companies. Sam, we're privileged to have you join us. I'll turn the virtual podium over to you.
Thank you, Mark. We're about to wrap up another part of our webinar series, Diversity to Differentiate. Think India, think Next. This opportunity was given to us by the Consul General of India in Chicago, and we thank Honorable Consul General Mr. Amit Kumar and his team for joining hands with us. This discussion was focused on the food processing sector, one of the focus areas at Nexdigm. We have published several thought leadership articles on the subject in collaboration with leading global associations, and have a team focused on looking at all developments in the industry. We have served many large companies in the field, both in India and internationally, improving their operations and processes to increase profitability. Experts agree that India-US relations is expected to be the most defining relationship in the 21st century, as it would partner the largest democracy by population and the richest democratic country. We have seen this come to fruition with increased investments from the United States. In fact, the number of large US companies investing in India has doubled year on year, even during the pandemic. Marc covered some of the big opportunities that lie in India today. This is just the beginning. Given the level of potential in the food processing sector, we expect that a number of leading firms will come into the picture over the next several years. I'd like to take the opportunity to thank our global audience, without whom we would not have a reason to have this event. I would like to extend a special sincere thanks to all of you, to our listeners from around the globe, to our distinguished guests, Honorable Consul General Mr. Amit Kumar, Pete Rose, Dhiren Kanwar, and KS Narayanan for their valuable insights. To the Consulate General of India, Chicago, for giving us the opportunity to organize this event. To Marc, who has done a wonderful job of moderating this session. And finally, to the team at Nexdigm, who worked tirelessly to make this an impactful session for everyone. That's it from my end. Stay safe and stay healthy.
Thank you, Sam. I appreciate you joining us, and to our listeners and viewers from across the globe. We're going to broadcast a very brief corporate video in just a moment. It's a nice overview of Nexdigm, after which this session will formally end. We invite all of you to connect with us for a discussion about how Nexdigm can work together with you and your organization. If you have any questions that we were unable to address during today's session, please reach out to us at thinknext@nexdigm.com, and we'll get you the personal attention for which we're widely known. Across the globe, we do think next at Nexdigm, and we invite you to do the same. We welcome your feedback on today's presentation. Enjoy the following video. Thank you and goodbye.
In the current global business scenario, organizations need to continuously explore opportunities to improve operational efficiencies and drive growth through innovation. But in order to achieve that, you need to streamline the diverse work streams of your organization while driving sustainable growth. And executing this plan calls for a team that is both experienced and qualified. This is where Nexdigm comes in. We are a global, independent, privately held, and employee-owned business and professional services firm. Be it continuous performance improvement, ongoing support, or strategic initiatives and special projects, we can support and help bridge the gap between strategy and success. Our dedicated teams specialize in business services and professional services and act as a catalyst across all the verticals. We have been around for more than 55 years, working with diverse companies ranging from multinational corporations to growing enterprises. Our offices are located around the world for global readiness to serve clients and support organizations into the next paradigm of business. To learn more, write to thinknext@nexdigm.com.
Thank you all.